Hey guys, welcome back to the Encrypted Capital Recap for Sunday, January 10th. All right, so first off, we got Bitcoin hanging out at $37,914. It is up 13% for the week, but it is down 6.45% for today. We got Ethereum at $1,269, up 34% for the week, slightly down today on the 24-hour. And then we have XRP up 40% for the week, slightly down today, about 4.1%. The total cryptocurrency market cap is sitting at $1,037,000,000,000 right now. So first off, we talked yesterday about some coins that we thought had yet to make a significant move in the market, and Dash exploded 100% shortly after we released that video, and then Bitcoin Cash broke out as well. So we did mention Dash and Bitcoin Cash in the video yesterday, and both of them started taking off shortly thereafter. So it says here that the price of Bitcoin has dropped below 40 grand, and then several high cap coins returned to the spotlight, Dash being one of them. So one of the reasons for the drops is likely an uptick in selling by miners, as reported yesterday by the Miners Position Index that calculates the ratio of Bitcoin leading all miner wallets to its 1 year moving average has reached levels where miners are selling. So it goes on to say that they're selling BTC. I'm going to punt a small short to scalp BTC in the short term bearish market. Other reasons are largely technical, as Bitcoin gives altcoins some time to catch up, and due to sentiment. The crypto fear and greed index, for example, has remained at dangerously high levels, suggesting that a pullback is likely. In fact, the metric has remained above 90 or extreme greed for 2 months, the longest period in its history. So, yeah, we could be looking at some profit taking here, but it does look like a lot of that profit taking is flowing into some of the larger cap altcoins, which is nice to see. Let's go ahead. We'll take a look at Dash. So yesterday we released this video. It was roughly, I want to say, about $100, and it went all the way up to 160. So about 60% from the time we released the video. Right now you can see that Dash is basically the only thing that's sitting in green right now, aside from Bitcoin Cash, and DNT District Network Token is slightly up today as well. But Dash, a nice 32% in the last 24 hours, looking really good. And we'll look at Bitcoin Cash here. Bitcoin Cash is sitting at $598 right now. You can see that I just went to go make a nice little move up here. We released the video yesterday, roughly just under $500, I believe. And so you would have been up about 20% on your money so far. Next, we have regulators dial up the heat. Dash, Zcash, and Monero reach boiling point. So this is from Cointelegraph. As we mentioned, we know that Bittrex was going to be delisting the privacy coins. And it says, can privacy coins be better managed to satisfy both law enforcement interests and those who like the greater anonymity they provide? So it says on New Year's Day, the US-based crypto exchange Bittrex announced via Twitter that it was delisting the privacy coins Monero, Zcash, and Dash. A link promised further details, but those who followed it learned nothing to explain why trades in those tokens would end on January 15th. And it goes on to say that still the news couldn't have been entirely surprising. Regulators both in the United States and abroad have been casting a gimlet eye as privacy coins, at privacy coins these days. Unlike Bitcoin and Ether, the coins promise enhanced anonymity by hiding users' addresses and transaction amounts, which makes transactions more difficult to trace. And so, like I said in previous videos, the whole point of cryptocurrency, in my opinion, was to have anonymous payments. And people always want to go ahead and use the fact that drug dealers are using it to exchange goods and services. And I mean, people do that with the regular fiat system anyway. I mean, people use dollar bills as it is. So for them to go ahead and make that argument, it just seems like they're looking for more control. They want to get basically take away more privacy from the people that are actually using cryptocurrencies. Hence the push towards more KYC, so know your customer, and AML, anti-money laundering laws that are trying to be put into place by the IRS in the United States. So it says elsewhere, the U.S. Internal Revenue Service announced in September that it would provide a bounty of up to $625,000 to anyone who could break Monero. So yeah, the IRS basically wants somebody to be able to crack the privacy coin Monero. It says it's suggesting that the agency believes the coin may be used to hide taxable income. I mean, people are going to use money for whatever they please, and to go after these privacy coins, it just seems like I said, more restrictions, more privacy taken away. And it says that Bittrex actions do not surprise me. Timothy Masad, former chairman of the U.S. Commodity Futures Trading Commission, is now a senior fellow at Harvard University's Kennedy School, told Cointelegraph, Bittrex actions don't surprise me. He went on to clarify that the use of crypto for illegal purposes has been a top concern of law enforcement agencies and regulators in the U.S. and elsewhere. So a focus on privacy coins is to be expected. So right here it says Bitcoin remains currency choice for criminals. Well, here's the thing. Most of the people that are using Bitcoin right now are purchasing their Bitcoin on exchanges that require know your customer and AML securities. So if you're on an exchange like Coinbase and they know who you are and you're sending the Coinbase or you're sending the coins or the Bitcoin that you just bought to an address off the exchange, they can still track and trace Bitcoin. So people think that Bitcoin was made for private transactions when really that couldn't be further from the truth, because a majority of the people in the market do not know how to hide their Bitcoins. So it says, but as often is the case with cryptocurrencies, things aren't as simple as they first appear. While acknowledging that many of the regulators' concerns with privacy coins are valid, Jevons observed that all the data still shows that Bitcoin, which is more traceable than cash, which we just said, remains the currency of choice for criminals because of the ubiquity of off-ramps into fiat. Meanwhile, following the Bittrex delisting, Dash's Twitter account unsurprisingly issued a defensive statement noting Dash's privacy functionality is no greater than Bitcoin's, making the label of privacy coin a misnomer for Dash. So we'll see what happens with these privacy coins. Again, I think some of these news articles that come out are to scare people in order to sell their coins early, as we just saw happen with Dash. If you would have sold your Dash when all of that information came out about Bittrex delisting, which was on January 1st, you see right here, there's a huge dip. A lot of people sold right here, but this is also a large volume candle right here. A large volume came in on this day right here. And so again, another couple days of accumulation, and then boom, it takes off to the upside. So, I question some of these motives here of what exchanges really are doing because of these coins, and if it's not, like I said, just a way to get people to sell early. So in other news, Bitcoin gets less risky the higher it goes. Legendary investor Bill Miller breaks down why the cryptocurrency could surge 100% in 2021. So this right here off the bat makes no sense to me whatsoever. Bitcoin gets less risky the higher it goes. Anybody who knows anything about investing knows it's the least risky when it's at the very bottom. It is the most risky asset to get into when it is reaching all-time highs. Any trader will tell you that. So I don't know what the hell this guy is thinking, but it sounds like he's full of shit. But let's see what he says here. Legendary investor Bill Miller told CNBC on Friday he sees Bitcoin surging 100% in 2021 as more investors add the coin to their portfolios as a hedge against inflation. One of the things that's interesting about Bitcoin is that it gets less risky the higher it goes, and that's the opposite of what happens with most stocks, the Miller Value Partners founder said. I don't know what this guy's smoking, but if he's watched Bitcoin for any length of time during any bull run, he knows that Bitcoin is prone to 80 to 90% corrections. Even just the last bull run, Bitcoin dropped from $20,000 all the way down to $3,800. So I don't know what this guy's talking about. It sounds like he's either pushing an agenda or he's just clueless. I have another article here from Yahoo Finance. Analyst who nailed Bitcoin's $40,000 level says 50% collapse could come next. Yes, and that is what we find with a lot of these big runs. There is a retrace. A lot of the times it is a 50% retrace, and it would not surprise me one bit if Bitcoin started getting up to, 45,000, 50,000, and then boom, a correction to go ahead and test the old previous high of 20,000 or somewhere around there. If that does happen, we'll have to see if the altcoins follow. Normally that does happen. If Bitcoin does have a slight pullback of 30%, we could essentially see a pullback in the altcoins. But given that there is a Tether lawsuit coming up, January 15th, Tether has to turn over their documents, their financial documents, over to the US government, and they'll have to basically state if they actually do have a 1-to-1 ratio for every tether, if it's backed by a dollar for each tether that they have. So I know that there's been a lot of controversy around Tether right now, And January 15th is when all this stuff happens. And we all know that January 19th is when Coinbase and a lot of other exchanges are suspending or delisting XRP. So Coinbase is just suspending the trading of XRP. They are not delisting it, but it's very interesting to me that this is right around the time that Tether has to turn in their documentation, and it's all just lining up rather interesting to me. So this Yahoo Finance article says it's a hyper volatile asset. Lee said in an interview with Yahoo Finance Live, our roadmap for risk assets this year is that stocks would be pretty explosive out of the gate and peak sometime either in late January, but as late as April around S&P 4000 before a big drawdown happens. If the S&P falls 10%, Bitcoin is going to have a huge drawdown. It could be 40 to 50%. So I never like to buy things when they're high. I always like to buy things when they're low, when they're in the red, when everybody's scared and panicked. Perfect example when we were talking about the XRP price drop after the SEC, dropping from what would have been roughly 90 something cents on Coinbase, fell all the way down to 18 cents, a huge level of resistance, huge amount of volume came in there. And, Grayscale, one of them just bought that up. I have that article right here. Grayscale dumping XRP was the headline of most media publications based on data from Bybit. However, a company spokesperson refuted all such claims. And it says a quick look at the Grayscale investment holdings now clarifies that no significant amount of XRP was liquidated in the past 7 days. However, earlier the chart did show mass liquidation. So a Grayscale spokesperson in an official statement said, statements about large sales of underlying assets by any of our investment products are false and inaccurate. Any perceived large decrease in the USD value of Grayscale XRP Trust would have been a result of a decrease in the USD price of XRP. So Grayscale stepped in here and they bought on New Year's Eve when no one was looking, all the way back here. Let's see. So they bought right in this range here. They basically bought the dip right around 18, 19, 20 cents. All of that was purchased right here. So obviously the SEC article didn't scare Grayscale out of anything. And, the smart money always buys when there is a lot of fear in the market. And, all my friends got spooked by the XRP news because they were buying XRP when it was 60, 70 cents on this last run up here. And they were wondering if XRP is even going to be around. So clearly they haven't done their homework. I would still like to see XRP get a nice push out of here. It's kind of flagging out. It looks like it went to make a move yesterday up to about 36 cents, and then it dropped all the way back down to 28 cents, and right now it's hovering at 31. So I'd like to see some good news come out here in the next day or two that helps push XRP up a little bit. But if we do get a retest of this level here of anywhere between 17 and 20 cents, I would be looking to add more to my position. But again, do your own research. On to the next article. Ethereum fees surged to all-time highs after the crypto passed the $1,000 mark. So it says after the Ether token surged past $1,000 on January 3rd, the average transaction fee of the network similarly soared to a new all-time high of $17.41 some 24 hours later. So the average fee has since retreated. Data on January 8th shows that the latest average fee at $9.79. The figure is still well above $3.56 seen on the first day of the new year. So yeah, Ethereum fees are at an all-time high. Obviously it's surging right now, but we do hope that Ethereum 2.0 will aim to solve some of these problems that they're having as they cross over from proof of work to proof of stake. You do need 32 Ethereum in order to be able to stake your coins and make some money off of it, but I think that that's going to be huge for Ethereum, so I am anxious to see them roll out Ethereum 2.0. Hopefully it's not too much further down the line here. All right, so that will do it for the Sunday edition of the Encrypted Capital Recap. Thank you guys so much for tuning in, and if you liked what you heard, please drop us a like, a comment, and subscribe, and we will catch you all in the next video.